6 months ago, the enterprise software stocks went way out of style at the Wall Street fashion show. Among the hardest hit is Snowflake, which helps companies store, organize, analyze, and use their data. Now, here's a stock that was down roughly 43% from its highs in February as of today's close. And it's tumbling again after hours trading, after, frankly, another quarter that simply couldn't excite potential buyers. Now, we know this whole group has struggled this year. At the same time, the data management space where Snowflake competes has become a lot more competitive. I acknowledge the problems this company faces, but now that the stock's been nearly cut in half from its highs in February, hasn't it finally been punished enough? Let's go straight to the source with Sridhar Ramaswamy. He's the CEO of Snowflake. Get a better read on the quarter and his plans for the future. Mr. Ramaswamy, welcome back to Mad Money.
Excited to be here, Jim.
Thank you, Sridhar. Now, I've got to tell you, we're going to get to what's happening in the stock in after hours, but I think it's very important to point out that you actually had a very solid quarter. A lot of better than expected congratulations of the analysts and big non-GAAP operating margin beat, 2-cent non-GAAP earnings per share beat. So, I mean, I wanted you to give some people a little context of the things you're doing right before we go into what's controversial.
Right. We had a solid quarter, Jim. Our product revenue grew 30% year on year. Remaining performance obligations, which is a measure of how much customers are investing in their future Snowflake consumption, went up to $5.2 billion, 48% year on year. We released more products in the first half of this year than we did all of last year, and our AI products have been used by more than 2,500 customers. So strong momentum across the board. We also raised our guidance for the year substantially. I feel good about what we got done and what's coming up.
Well, do you think it's possible that people are focused on what we consider to be some margin erosion? I mean, you had 10% non-GAAP operating margin in the third quarter last year, and now it's come down pretty substantially from them. And maybe people are saying, wait a second, if the margins are coming down, there must be too much competition in the space.
I don't think it's that, Jim. We are investing in our future, whether it is in engineering or in sales to go sell the product more. Obviously, in investments in things like GPUs, but all of these are going to create a better future for us in terms of driving more top-line growth, and that's the thing to focus on. I focus on delivering amazing amounts of revenue, and we're obviously thoughtful in how we go about doing this, so I would say that's not a long-term worry, but the first thing that I want to get done is substantial product adoption and growth.
And you think that this consumption model works in this environment maybe better than ever, given the fact that a lot of enterprise software companies are seeing a lot of competition?
The consumption model works really well because it is value aligned. We work very hard with our customers to make sure that they only bring on use cases that have clear business value. We do that even with AI. We don't ask for blanket investments. And by having this mindset of always focusing on customer value, consumption almost becomes a trailing indicator of what is going on. And this is why we feel confident about the coming quarters. And that's why we raised our guidance for the year, because we feel our model is very aligned with what creates value for our customers.
Okay, well, again, I'm just trying to fill in the puzzle. And I might say that there were probably some people who felt that the May cyber attack that occurred, the security breach may have hurt your company, but on the conference call, it's pretty clear that it seems like it wasn't your fault.
That's right. It was absolutely not our fault. The only customers that had their accounts breached were customers that had user IDs and passwords without things like multi-factor authentication that then had these stolen and then used for unauthorized access. The thing that we tell our customers constantly is make sure that they have multi-factor authentication turned on and having things like network policies, which restrict who can come into the Snowflake security perimeter, also turned on. By the way, we have supported these features for close to 10 years, since 2016. And I'll also tell you, these headlines, and that's what they are, have not really affected our core business with existing or new customers. We obviously talk about security a lot more with customers because we want them to be safe. But the core Snowflake platform is incredibly strong and secure.
I have a question that is difficult for you to ask because you're not at the company I'm going to mention, but there is a sense from some press coverage that Databricks is a very formidable competitor of yours. Now, you can't say, well, Jim, you should go ask Databricks. I understand that. But fact is that the press is focused on this kind of dogfight. Maybe that is what's dogging your stock.
I honestly think that competition is a good thing. It's a good thing for our customers. It gives us motivation to go create better products. We have an amazing notebook that is going to be, generally available to all of our customers shortly. And competition makes us all move faster. It is a good thing. But the strength of Snowflake is in the core product, is in our product philosophy of making technology simple, not more complex. We are very, very confident that this is the formula for long-term success. Not a lot of quickly developed things that barely work with each other. And we will focus on our core strength and working with our customers to continue to deliver value.
Understand. Now, you also did, you have a couple of new products that I think maybe one or two, a Cortex or a Snowpark. You should just talk about what it, because the analysts seem to think they're very excited about the new products.
I am very excited about Cortex Analyst. It is, it's a dream of everybody that's been working on analytics for a very long time. It gives business users access to data without needing to know things like SQL, without relying on analysts and various kinds of dashboards to get at data. But we do it the Snowflake way. We make it easy to use, and we also make it reliable, meaning that a business user can actually rely on this to make decisions. If you build something off the shelf, you get like 50% reliability, meaning it's wrong half the time. And so that's our secret sauce, and companies like Bayer are using this to answer business questions with lots more along the way. Those are the kinds of products that very much epitomize what Snowflake is about. It's easy, it's efficient, and it's trustable.
Well, look, I'm going to leave it at that, but I've got to tell you, it is a mystery. We went over all the tough questions, and I thought you answered them very well. I think that you get sometimes a momentum that needs to be broken by the fact that you're doing so well in business, but then again, maybe people just think the stock's too expensive. I don't know, but I'm glad you came on the show, and you gave us a very good acquittal of what's going on. I want to thank Sridhar Ramaswamy. He's the CEO of Snowflake. Read the conference call. You'll think that everybody loved it. I'm trying to figure it out myself. Thank you, Sridhar. Good to see you.
Thank you, Jim. Good to see you.
Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.